Hey everyone, this is Antonio the 13th here, back with another update after a long absence. Apologies for the long absence. I got demotivated and lost discipline to do these videos, to be honest. And yeah, that's not something that should have happened, but did. I'm going to I'm not going to use the excuse of waiting for next year to sort of make this like a New Year's resolution to, get back into this. I'm just going to do it. I decided to just get back into it now and, yeah, restart this. Um, yeah, so let's just get right into it. I'm going to basically go over here what I've been doing the past couple months. Even though I've been away from YouTube, I've still been, attempting to trade and make money. Yeah, I'll go over how that's been going the past few months and what my current positions are. And yeah, and then my next video, I'll still be doing these on a once per month basis. I still think my account is at a point to where yeah, having a video once a month is probably sufficient. I could do a weekly video, but it would just be mostly, I rolled this call or, I did another, covered call or cash secured put on this position, on the same tickers, and I just don't want to, do that video weekly. I think there's enough of those sorts of videos on YouTube, so I will just for the moment until, things, until this account gets a little larger and, I'm doing perhaps more with it. Um, until then, I will probably keep these on a monthly update. So, anyways, let's get right into it. So, right now, just as sort of like a review, year to date thus far, I am just barely up $269. Just a recap from the first video I started, or from the first video I did when I started the channel. I had a good start to the year, doing spreads and things like that, and then I lost big. It says my account went down to 25 grand, but at the time my account was only like 7 grand or something. So this Robinhood calculates things a little differently, but basically this drop here basically took out my entire account. And so after that point, I had to throw some more money in there and restart from scratch. Um, and all this year has basically just been me trying to claw my way out of this hole that I dug for myself without relying as heavily on spreads as I had at the beginning of the year. And you can see this big dip here when this was during the April crash, with the tariffs and all that. And then from there, it's been on a slow and steady climb here. Um, so yeah, to the point where now I'm actually green for the year, as of right now. Of course, that can change. There's 2025 is almost over, but there's still time left in it. So there's still time to take this red. But yeah, as of right now, things are going well. Let's go ahead and cover what I did for the past month or past couple months, and I will pull up uh, my spreadsheet here that I use to track my trades. And we'll just go over this very briefly. Basically, mostly what I did was wheel trades in and out of USO and IWM, and Nvidia. Yep, those are that's basically what I mainly traded. There were some other positions that I had from earlier in the year, which I got to make a bit of money off of. I was trading Target earlier in the year, and I made some money off of that. And so I started off the beginning of Q3 here pretty well. But then I started, as you can see here probably in the descriptions, I started getting back into spreads and iron condors again and things like that. And I just, yeah, that's when I start losing money again. I just, I've found with these spreads that most of the time that if I were to let them work and if I were patient and disciplined, that it would it would be just fine and I would actually make money. But the moment that something happens in the market and the trade starts going against me, I panic, I lose discipline and patience, and then I take a loss. And you know it hasn't put me massively negative, obviously, but it has it's made it to where like I'm not as profitable as I could be, definitely. Um, so that was basically what happened in Q3. The only other notable thing that I could probably mention here is plug I mentioned in some earlier videos. I was in that. I got into that when it was below $1. Um, you may or may not be aware, but it started going back up pretty high, like to around the $2 to $3 range. I don't know what it is now, but um, it had a good rebound, and I sold some covered calls. I ended up making money on some covered calls before I finally got assigned and called away from my position. So I'm no longer in plug there. And yeah, so that was basically Q3, very rapidly summed up. I don't want to make this an hour-long video. So in terms of Q4, since we're in that now, yeah, this quarter has been going pretty well thus far. I've still done some spreads, but as you can see from the list here, the majority of this has been, either, me just throwing some money at zero TDEs or, doing some covered calls and cash secured puts. Again, mostly the same names, NVIDIA and IWM. But I've moved away from IWM because it's yeah, the market has just gotten a little too richly valued for my taste, and so yeah, we'll get into that in a moment. But basically, I'm done with IWM for now, and I'm on to other positions. I actually made a small amount of money with some spreads, and yeah, uh, that will basically get us into where I'm at in the account now. So let's go ahead and cover that. So right now, I am positioning myself and my portfolio kind of at least what I would consider to be, you know, defensive long holdings. You may disagree with me on that, but yeah, basically, I'm buying things that I don't mind holding in the long term, or I'm buying things with a very, with defensive hedges in place. So let's talk about some of my longs here first. My biggest long-term investment that I'm planning on holding is Coca-Cola here. I have about a $68 average on this. Yep, 68.29. And yeah, I think this position kind of speaks for itself. It's of course, everybody knows what Coke is. It's a very reliable blue chip stock, in the event that the market tanks and this stock, if it goes down with the general market, I'm not going to have a problem with averaging down on this thing and feeling bad if, my equity in this position starts, really getting negative. I'm not going to mind holding this one at all. So the next on the list here is Pfizer. This is, I noticed this one because I was looking at dividend stocks, and at the time it was mentioning that it was like around a 6 or 7% dividend yield. So that really kind of piqued my interest. There are other technical reasons why I bought Pfizer. I think it's down like 50% on the year or something like that. So that's year to date. Oh no, I'm way off. It's only down 10%. I thought it was down a lot more than that for some reason. But yeah, so it's down a bit this year. I saw that it was down, and I didn't really think it was justified. They have some good revenues. They have decent cash flow. Revenue is coming down because, people aren't buying, their products as much. There isn't as much of a demand for them as there is now. But in terms of their cash flow, they're still okay. And they kind of have seemed to bottomed, at least in the short term, on a technical basis. Trump announced some sort of deal with them in which Pfizer is going to sell some medication at a discounted rate or something like that. And so I think this is one of those companies that, like Intel, and there's a couple others that Trump has kind of been propping up that, if things get really bad, I don't think this company is going to be allowed to fail. So, in my opinion, I might as well hold it and collect the fairly decent dividend on it while I'm waiting for a better opportunity. So, that's my justification for being in Pfizer. And then there's one other long-ish position that I have on here. Well, long position. And this is Smithfield Foods. Again, another decent dividend payer. It's like around 4 or 5%. Let me see if Robinhood will actually show that here. Okay, I'm not seeing it off the bat, but I know their dividend is like around 4 or 5%. It's announced to be around 25 cents this coming quarter. They have decent cash flow, growing revenues, and their debt to equity ratio is what really attracted me to this company. Again, with these long positions, I want something that I'm not going to mind holding if the market tanks. And with a company that has fairly decent fundamentals that like this one seems to have, I won't feel bad about holding it if things start crashing. My only complaint about this stock is that it was very recently relisted. So there's not a lot of, history here. You can see even just going back a year, you're not going to see anything because this was listed on January 28th of this year. So keep that in mind if you, take a look into this stock. But yeah, so those are my long-term investments that I'm choosing to allocate part of my account here into. And the main bulk of my account is USO here. And it is the biggest part of my account, but it's not, even though I have shares, it's not something that I intend holding in the long term. So let me explain kind of what I'm doing here. So I have 200 shares of USO, as you can see here, but I also have two very high delta puts here on USO expiring December 19th. And so basically, kind of how I've engineered this trade with USO is that if the stock goes up, I will, have appreciation on the shares, but obviously I will also be losing around the same amount on the puts. Since the delta is so high on these puts here, near 1, and I did the calculation when I bought these puts, I ended up getting these puts for absolutely like super cheap in terms of like extrinsic value. I only ended up paying like $40 total in extrinsic value. So we're talking very high delta puts here. And so basically, yeah, as I mentioned, if USO goes up, the shares appreciate, but the puts also depreciate in the same, at the same value, and vice versa. If USO goes down, the puts appreciate at the same value that the shares are going to depreciate, approximately. So, why am I doing this? Because you might be asking, because this is a trade that basically, kind of negates itself, minus the, whatever small amount of money that I put into the puts in terms of extrinsic value. And the reason that I am doing this is because I'm basically just premium harvesting covered calls without having downside, basically. So I can sell these two. Here are the ones that I'm selling this week at the $72.50 strike here. At the time that I sold it, it was around 20 delta. It probably, yeah, as of close, it was 30 delta. So, there is some chance of assignment here, but yeah, it's not super high. And basically, what this allows me to do is collect premium without having the downside of the stock. If USO just crashes because the stock market, a recession is announced and oil just plummets, then I will have this put, or I will have the puts that I bought protecting my long shares. And if it doesn't, if the stock market doesn't really just plummet, then, worst case scenario, I'll be collecting some premium. And maybe if USO blows past my covered call here and I get assigned, there's a few dollars I miss out on, because, I get capped with this covered call. But I guess real worst case scenario would be some sort of conflict happens in the Middle East, or the conflict between Russia and Ukraine just really, exacerbates for some reason, and oil just shoots up, way past my covered call. Then that is a scenario in which I will be really losing money on this position. But even then, my account won't go to zero, and yeah, and I personally think, again, my opinion, I think that the likelihood of such an event, at least until, December 19th, or, before December 19th of this year, is low, in my opinion. So, um, if I had some more money in my account, I would rather be doing this on like even IWM, but IWM has gotten so high at this point that I couldn't feasibly buy, enough shares to write a covered call against my position and get a deep in the money put option without going into very significant amounts um, of margin. Uh, Perhaps I could do this with NVIDIA instead or another single stock, but I wanted to do this on something with a... NVIDIA has a lot of liquidity, maybe even more than USO. But the reason why I ended up going with USO is because it doesn't have daily options, but it does have, I don't know what you would call them, sub-weekly options. Basically, in the options chain, you can get options that expire, on the regular, weekly expirations on Friday, or you can also get options that expire on Wednesday. So they don't offer dailies like, IWM and the other, big ETFs do. But if I want to sell covered calls more often than just, once a week, then I have the option to do that. So that's another reason why I ended up, doing this sort of trade with USO instead of, NVIDIA or another stock. So yeah, I think that covers my current positions. This is basically what I'm going to be doing. I for the foreseeable future until the markets pull back significantly. Right now, we kind of have a little bit of a pullback, but it remains to be seen as to whether this will be just a temporary, downward detour the from the ever, upward trajectory that the stock market currently seems to have, or whether, this current downward movement is actually going to be something more serious. Remains to be seen. So we'll see what happens with that. I guess one other thing I could mention here is I have a covered call currently against my Coca-Cola position. It could feasibly be assigned, obviously, and if I do get assigned, I will just, since this is, a position that I planned on holding, long term, I will just sell cash secured puts on this basically until I get reassigned, basically, if I do end up getting assigned on these covered calls. So, or on this covered call. So yeah, that'll do it for this update. My next update will be in the beginning of December. Again, I'll be doing these just monthly. It'd probably be boring if I were to do a weekly video just covering, cash secured puts and covered calls on these positions. So yeah, thank you for watching, and I look forward to seeing you in the next video.